Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, September the 13th, the year's 2020. Let's talk trading. It's time for the weekly open and gap. Just so you know, these videos are for educational purposes only. And I also want you to make sure that you don't lose any more on any one trade than you're willing to lose on a trade. And I want to make sure your brain management is in gear. No fear, no regret. And finally, money management. Take profit before the market takes it back. Sounds simple, but sometimes it's not so easy to do. And as we look at the weekly chart, the dashboard here, you can see most of the gaps have filled, two have not filled. Now remember last week we had about 4 or 5 that hadn't filled, with the pound being one of them. So even though the strike rate of these gap fills is like the high 80s, low 90s, sometimes those gaps don't fill. And sometimes because of the spread, you can't even get in to get to part of the fill. That's just trading. So as you can see here, we did open. We gapped down below that. We opened below the weekly close here. We haven't broken that weekly low. In fact, we're into the body of the candle. So out of last week's wick zone, you can see price is moving up out of it. And we're putting in the opening range for the week right here. Here's the opening range for the month up here. You can see we're only below it by 530 some pips. $421 pips below the yearly open. We're outside of that inside bar that happened 5 weeks ago, 100 pips below that bar's low. But if I scrunch this down, you can see here's the inside bar of the month that happened 5 months ago. But we have a lot of candidates for inside bars here. So if you traders that like to trade inside bars, there you go. Now, I just said there were a lot of candidates. As you know, I'm a proponent of just trading one pair day after day, week after week, month after month. Now, if you've been following my videos, you know I've been trading I think it was the dollar yen for a long time. And then I started talking with Walmart, and he liked to do the pound dollar. So I switched over. I think we did that in February or March. And that's what all pretty much all been trading, is that one pair. Because when you trade one pair, you'll start to get a feel for it. You'll start to recognize things like, oh, I've seen that happen before. So, oh, we just had a high touch alert on the day. As you get familiar with the pair, then you could probably be more profitable. But some of you like to just, as I would say, just go from pair to pair. You look for the opportunities. There's nothing wrong with that. But if you're a beginning trader or a trader who's not profitable, part of the reason you're not profitable is probably because you're flitting from pair to pair, looking for that big strike. It's not the way to do it. It's better to stick with that one pair and grind it out. Just grind out those pips. Maybe it's 2 pips, 3 pips. You get a 5 or a 10, and then maybe you luck up and you get a 20 or a 50 one day. But you just let it add up. That's much better than hopping from pair to pair, especially if you're not profitable. So, if you're not profitable, you need to cut the variables down. So, rather than trade 2 or more pairs, you trade one pair. Rather than trade 2 or more methods, you trade one method. And then you simplify things. Then you can focus. Then you won't miss those entries. Because what's one of the worst things that can happen? Oh, you were watching the pound, but then you saw an opportunity on the euro yen. You get over here, and then you're so focused on this, you forget about the pound. And there was that one juicy trade that you would have had, but you missed it because you were focused on something else. Now, I know that probably sounds funny coming from somebody who created this dashboard, but the thing is, it does alert you to opportunities. And if you are profitable and if you can do it, it's a great tool. But then again, you could just have the one pair and on the dashboard, and it still gives you a lot of information that you can use in your trading. So it's just something to consider. If you're not profitable, one method, one pair, stick to it till you're profitable. So here we've got the range, no ranges over 100 here. Oh, and if you're wondering why do I have the fib and I hardly ever talk about it, just gives you a clue where price is in today's range. You see we're at the 93%, 91% level here. We're 5 pips off the high. Remember, we just had that high alert, so that would have been at 100. And sometimes if you switch it back or you add another column and you have fib for the previous day, then you know where it is in relation to the previous day. You can see breakouts and things of that nature. So it can be handy to use. Pivot point, we took it out. So we gapped down. Pivot was above the open. So fading the pivot, we had two reasons to go long. You see here it paid off during the first hour. Well, depending on how big the spread was. I don't know. The spread could have, in fact, the ask could have been here and the bid could have been here. So I don't know. I wasn't in front of the screen at that time. But we did have a long trigger to the pivot and it filled. So that daily pivot got taken out. Rat zone 58, range is large enough. So could be red rat time. But I usually like to wait for this to get around 100 or 90 something. And you know, in the smart ranges, it'll tell you what the percentile is. So the higher the percentile, chances are it's a better time to start looking for that rat reversal. Pivot, weekly pivot, 1.2940, call it 41. Let's see if we take out that pivot later in the week. Last week's weekly pivot, I think, was missed. So previous day's pivot was missed. Let's take a look at that weekly pivot. Yeah, we missed that weekly pivot last week. It's way up here. And here's that weekly pivot once again for this week. We're in the wick zone, upper wick zone at the moment. And I was talking about those ranges. So you can see here, the range here on Thursday was 262 at the 99 percentile. Good time to look for a reversal. Here we had a range of 138 that was 74, 189, 95 percentile. So if you look here, then you look at the high minus close. So we had a range of 262. We had a high minus close of 99. And we had a close minus low of 31. So see here, it was out of that lower rat zone, 31 pips off the bottom. So this was a red candle. I think this was a red candle too, 2 days ago. But the price bounced out. So that's how you use these indicators in conjunction. So you have the range high minus low, you have the range high minus close, range close minus low. These are for rat reversals. And here's the high minus open. That's for your buy zone going long. And let's see. And then we have, see, I guess we don't have open minus low on this chart unless, oh, there it is. It's down there. I have to take this indicator off to see it. But I just have this indicator on so I can switch different pairs while I do the videos. But you don't have to have that indicator on if you're just trading one pair, or you can use another chart to switch the pairs. So here, just looking at one of my trading charts, we got the wall. I believe this has the Walmart lines. Yes, it does. There's the sell. There's the buy line. And right now we're between the Walmart lines. Simple price action chart. Once again, if you're a struggling trader, try something really simple. We know, based on statistics, that between certain hours of the day, these hourly candles are going to be something like 13 or more, 100% of the time, 90% of the time, based on statistics. So there's no reason that you can't take these trades and with proper money management, because you're not going to win them all, be profitable at the end of the session or the end of the week. Remember, these videos are for educational purposes only, and your results may differ from mine. But when you look at the statistics, they're on your side. All you have to do is execute. You don't have to get cute, and you don't have to add anything to the chart. There's so many traders. I see them, they'll take something and they'll put a squiggly line on it. And or they'll put volume on it, or they'll put something else on it. It's not necessary. You're only fooling yourself, especially if you're not profitable. Now, if you're profitable and you think you can play this and you can play it even better using your line you want, then you go for it. But if you're brand new, if you're not profitable, don't do it. Just don't. And I really find it amusing when there's a trader that's, oh yeah, I'm new to forex trading, I'm new to trading, and yeah, but I heard about these Bollinger Bands, so I'm going to put that on this chart. You don't need it. You really don't. I'm trying to think where there's some questions out there that people were asking me. I can't really think of anything. Oh, and once again, these indicators, if you have a phone, you can't download them to your phone. If you have a tablet, you can't download them to your tablet. No, you need a computer, okay? You need a computer. And some people ask me, they're still asking me, will I write them in EA? And the answer is no. Don't write EAs for public consumption. There's too many things that can go wrong. I don't want to be held responsible or blamed. Okay? So the answer is no. I'm not coding you EAs. You're not going to find EAs from the TheRumpledOne out there. Indicators, yes. EAs, no. Just not going to do it. I'm trying to remember if there was any other pertinent questions. I can't think of any. But I know there was a few traders who have adapted this method. They're trying it out. And some of them are actually profitable. And I really find it amusing, though, for the guys who aren't profitable, how they cling on to what they think they already know. Because, trading's all about being profitable. And if you're not profitable, and somebody comes along and tells you, well, you need to get that off your chart, or you need to put this on your chart, and you need to stop doing this, and you need to start doing that. And you're saying, oh, but it's like, oh, but what? You don't have any empirical evidence to the contrary. And then I find it kind of amusing. There was a YouTube video out there, and they said, yeah, well, you can't learn trading off of YouTube. Well, you know what? On the one hand, they're right. The only way you learn to trade is trade. It's like you don't learn to swim unless you get wet. Which, by the way, for the record, I can't swim because my body's too dense. I got low lung capacity, so I can't float. I mean, it takes two life preservers to save me. But I like using that analogy. So you have to get in there and trade. So yeah, I guess in that aspect, you can't learn trading from the internet and YouTube. But the thing is, it's not what you trade, it's how you trade it. So get out there and drain the banks. I hope you have a profitable week this week. And don't forget to subscribe. TheRumpledOne over and